Swayam Prabha. Digital India. Educated India.
So dear students, we have completed 13 modules. Till now, I hope you would have understood different aspects of cost accounting. So we have covered cost accumulation, then we have also discussed CVP and BEP analysis. In the last module, we were discussing how to apply the cost concepts and cost data for the decision making, where we were studying about the relevant costs and decision making. Today we will start with budget. It is a very important area, very interesting and has a very wide coverage. It actually goes beyond cost accounting or management accounting. It is used in various spheres. It is used in almost all sorts of organizations. Immediately when we use the word budget, what does it come to your mind? So what do you recollect when we use the budget? I think most of the people would have recollected union budget or the government budget, because it is that time where many times finance minister says I will cut down the subsidies, so petrol prices have increased, gas prices have increased and it affects common man. For salaried people also that budget announcement is very important because tax rates change, some of the tax incentives are withdrawn, some new schemes are added. So union budget becomes a very important event. I hope you all know in India when it is declared. Are you aware? Do you remember? In which month? Is it in March, April, May, or is it in February, January? Do you remember when is it announced? Usually it is announced on 28th of Feb, last day of February, and it is for the period starting from 1st of April. So for next financial year, Union Finance Minister typically announces the budget on 28th of April. This is about the government budget, central government budget. I think some of you, especially those who are working, would also be aware of the budgets within the department. So for any entity, they will have some sanction of the budget, and within that sanction you have to keep your expenditure. And some of the students, I think they may have some budget on pocket money that you can spend only this much. So you have to maintain your costs within that. So this is the different ways in which budget is used. I just explained it so that you can relate it to your day-to-day life, because budget is not just a concept within managerial accounting. It is used in various spheres of life and has proved to be a very, very effective and useful technique. We will discuss today exactly what the technique gives and what are its objectives, advantages, and we will also discuss a few cases or the problems. So let us see now what the budget is. So this is our module 14 on the budget. We are going to cover introduction, objectives of making the budget, the advantages, what consists of budgetary control system, that is its components. We will also talk about the types of budgets, and there is a technique of budget known as zero based budgeting, that also we will like to discuss. Now let us understand what the budget is. As we have just now seen or discussed, the union budget, it is declared by finance minister on 20th of Feb for the budget period starting in the new financial year. I hope you remember now what is a financial year. So financial year in India starts from 1st of April and ends on 31st of March. So let us say on 20th Feb 2013, Finance Minister will announce the budget for the period starting from 1st April 2013 to 31st March 2014. So essentially the budget is presented or prepared prior to starting of the period. So it does not give you actuals. We have already learned P&L account and balance sheet and cash flow. So I hope you remember that financial statements present the actual information for a particular period. But in case of budget, what happens is it is not actual information. The budget is prepared prior to starting of period. So it gives some estimates. That is why I have said that budget refers to an estimated statement. As we have already seen, it is prepared both by companies, government. In fact, in day-to-day life, even in family, the budget is prepared. Many times it may not be prepared in writing and may not be declared as such, but everyone must keep how much money is available, how much money can be spent, and that is the budget. The third aspect of budget is it is for attaining some goal. So we set some priorities, we decide some objectives and accordingly decide to spend the money or use the resources, and that is all reflected in the budget. Now let us see the formal definition of the budget. This is a detailed definition, as you can see, which says that it can be defined. Budget is a financial or quantitative statement. It is prepared and approved prior to a defined period of time of the policy to be pursued during that period. So what it says is it should be financial or quantitative. If you just say that the next year our sales will improve, or if in the family somebody says that from after 2 months my salary will increase, then it is not a clear statement. What we want is in clear terms what is going to be received or paid, what is going to be income or expenditure, whatever it is, but it should be in clear quantitative or financial terms. So if you just say that I will study more in next month, then it is not a budget. If you say that I will study for 4 hours, then you can say that I have budgeted my studies. Second is it is prepared and approved prior to a defined period. So after 1st of April you cannot make budget. You have to make the budget before the period of starting, and it needs to be properly approved. So in a company, some higher authority like departmental managers or CEO may approve. In government, finance minister presents it and parliament approves. So it is prepared and approved prior to a period, and it is of the policy to be pursued during that period for the purpose of attaining given objective. So as we have seen, you will have some objective in mind, and to achieve that objective you should set your budget. For example, if your objective is that I have to provide for higher education, you must ensure that you do sufficient savings for 4-5 years before, so that you will be able to provide for higher education. If you say if you feel that petrol prices are going to go up, so my transport cost is going to increase, that is why I have to make more provision for it, then to meet that objective you have to ensure that other expenses are minimized or your income increases. So it is prepared for the purpose of attaining some objective. There are variety of budgets. So budget may include income, expenditure and employment of capital. So in government budget, finance minister projects that so much of tax will be received. That's the income for the government. Government also predicts that we will spend so much on education, we will spend so much on social security, we will spend so much on employment. So it includes expenditure. Same way in a company, there will be a sales budget which forecasts how much income is expended. You will also fix up expenditure for marketing, for administration, for production and so on. So some expenditure limits are decided. it is also for employment of capital. So it is not just income and expenditure. In a company, if you project that the demand is increasing very fast, so after 3 years I need to double my capacity. Naturally, to double your capacity, you will have to buy new machines, you will have to expand the capacity of the existing machines, you may have to acquire new space and so on. So budgeting is also done as to how much more capital will be required and how that capital can be raised. So business may plan to approach the bank for a loan, or they may plan for going for an IPO. So that is the budget for employment and for raising of capital. The main purpose of budget is it is used for control purposes. We will see in detail what are the other advantages, but primarily it is a tool where you set the target and try to ensure that the target is achieved. So the control purpose is a main purpose of making of budgets. Now from the budget, we come to a technique in management which is known as budgetary control. So in budgetary control, the idea is to set the budget, then to record the actuals, compare the actual with the budget, look at what are the deviations or the variances, then analyze those variances systematically, take the corrective action wherever possible. If corrective action is not possible, you may have to revise your budget. So all these gamut of activities are done within a tool which is known as budgetary control. So as I have put it here, it is a process in which budget is set, actuals are compared, and then we analyze the variances. We will see in detail how it is defined. So what it means is the establishment of budgets relating the responsibilities of executives to the prerequisites of policies and the continuous evaluation of actual with budgeted results. So what is expected in budget is you have goals in mind. So for achieving certain goals, you have to decide objectives, you have to decide the actions which need to be taken. Not only you decide the action, you also fix up the responsibility of the executives to ensure that the policy is achieved. And then, so that is a budget establishment. And then you record the actuals as and when the data is available. It could be done weekly, monthly, etc. And then the actuals are compared with the budget, so that you know that what was planned and what is being achieved. So we are continuing here. So it says that the continuous evaluation of actual with budgeted results, either to secure by individual action the objective of that policy or to provide the base for its revision. So when you compare actuals with the budgets, you will come to know whether actuals are in line with budget. Very often they are not. So you have to secure some corrective action so that the budget is achieved, right? Or if you feel that because of changes in the outside scenario, the budget cannot be achieved, then we have to take some revision of budget. So this comparison or the analysis also provides the basis for revision of budget. Not only that, for the coming period, for the future period when the budget is fixed, again this feedback will be useful. All this is covered into a tool which is known as budgetary control. Most of the companies do have budgetary control system which is properly set and is aligned with the other managerial processes. Now let us see what are the objectives of the budget. One of the objectives of budget is planning. As we know that budget is an estimated statement, it is prepared prior to the period, essentially to ensure that your activities are well planned. So budget acts as a very systematic, properly prepared quantitative plan. So you can see here, it is a set of targets or goal is often achieved to lead and focus individual and group actions. Planning not only motivates but also improves overall decision making. So planning is the first achievement of the budget. You do a proper plan and it is communicated to the employees well in time. So it acts as a motivator because they have some target which is very clear now and it is to be achieved. And it also improves decision making because you are seeing the whole picture and doing a proper planning. Next is directing. So when the budget is done, the objective of planning is achieved. When you actually implement, then you are able to direct your activities properly because you have goal at one end and you are able to go towards the goal. If there is any deviation, you can again reset your activities or you can also change the goal if necessary. So business is very complex. It requires more formal direction and coordination. So what happens is a family or an informal scenario, you may not require that formal direction. It may come out of love and affection. But in business, it's a very complex activity. It requires formal direction and coordination. Once the budget are in place, they can be used to direct and coordinate the operations in order to achieve the target. So target is properly known. So all the efforts and energies are properly channelized through budgeting process. Next is controlling. Now the actual performance can be compared with the planned target. This provides prompt feedback about the performance. So that is a first advantage from the controlling viewpoint, that as the period is progressing, it will not come suddenly as a surprise to you ki arey I am not able to achieve the result. If you are missing the targets, within a week or within a month you will come to know. So it provides a prompt feedback because you are able to compare with the budget your actual performance and immediately you know whether you are achieving or not achieving. Secondly, it also prevents unplanned ad hoc expenditure. So suddenly some expenditure requirement has come, so in hurry it gets approved and huge money is spent without proper thinking. That is avoided because when the budget is set, properly set, at that stage you have thought of all expenditures, you have also thought of various contingencies and how to take care of them so that unwanted, unplanned and ad hoc expenditures are avoided. All your resources are channelized in a proper manner and that can be controlled more systematically. So these were the advantages of the objectives of the budgeting system, that you have proper planning, directing and controlling. Now let us look at the advantages of having a good budgetary control system. First one is enables the managers and administrators to conduct the activities in efficient manner. So all your business activities now can be conducted very efficiently because you know the target, you know where the efforts are to be put, and managers or administrators, whether in corporate or in government, they can conduct the activities efficiently. Second, it provides yardstick for measuring and evaluating the performance of individuals and their departments. In absence of budgets, employees feel demotivated because they don't have any set goal. So whatever they achieve, it is likely that supervisors are unhappy. In budget, what happens is it gives a clear yardstick so that one can measure and evaluate the performance. This is applicable both to the individuals as well as to the departments or SBUs, so that the performance is properly evaluated, measured. Next is it reveals the deviations from the budget by comparing with the actuals, and it helps in prompt review process. So as we were just discussing, it doesn't happen that after a very long time you come to know that you are not achieving the goal. Since the budget can be broken down week wise or month wise, there is a timely feedback mechanism so that you can review if you are going wrong and take corrective actions. The next one is it creates suitable conditions for implementing standard costing systems. In our next module, we are going to discuss standard costing system in detail. But in short, what is done is, in standard costing system, you set the standard for an individual as well as an activity. Now in budget, it becomes a starting point for implementation of standard costing system, because it helps us to estimate and set up some target or some benchmark that can later be converted into standard. And standard costing system also contributes and acts as a very important control technique. Next is, it acts as a systematic base for framing future policies and targets. So this year's budget can be used as a base for next year's budget. We know that for achieving this particular goal, so much of resources were allocated, and this is how the actual performance was done. So for the future periods, when we are fixing up our policies and targets, budget becomes a very systematic base. It inculcates a feeling of cost consciousness and goal orientation. That is very important. So what happens is, because of budget, employees at various stages, whether at a CEO or a top level or down to a very subordinate level, or all employees know what is a goal, and there is a feeling of goal orientation, so that energies are properly channelized, and there is also cost consciousness. So people try to avoid unwanted expenditure and focus on doing what is very important, what is critical. It leads to effective utilization of various resources as the activities are planned and executed effectively. So you know that within the available resources could be money, it could be time, it could be availability of machines, whatever, but whatever is your available resources, they are used effectively, they are coordinated well. So it does not happen that you have set up, installed a huge machinery, created lot of production facilities, but you have not created proper marketing mechanism. Then what will happen? You do have lot of production facility, but you have not done enough to push your sales. So you may not have enough demand. Because of lack of enough demand, your production facilities will remain idle. In budget, the effort is done to see that there is proper coordination. So whenever you take a decision to install new machineries and increase your production capacity, simultaneously you also focus on marketing so that you create more demand, right? Now what may happen is, okay, you have more production facility, you also have spent enough to generate more demand, so selling is well done, but the delivery is not taken care. So you are getting demand, but you are not able to serve because maybe your delivery mechanism is not done. Again, there will be idle resources. So in budget, all functions are properly coordinated so that the resource utilization is effective and you are able to channelize your energies properly. Now let us look at the components of budgetary control system. Now policy of a business for a defined period of time is represented by the master budget. So master budget is a key component, it's a starting point for the budgetary control system that gives an overall idea as to what should be done. Then the details are in the individual budgets. Of course, it's a circular process. You have first your master budget, from which you will do some allocations to individual or functional budgets. Again, from the feedback of functional budgets, the master budget may be reshaped and so on. Now, what are these functional budgets? They can be grouped into physical, cost and profit budgets. We will see what are they, but broadly these are the three types. Now let us look at what are the physical budgets. These are those budgets which contain information in terms of physical units. So they do not get involved into monetary aspect. They look at the physical units of sales or production. So examples are quantity of sales, quantity of production, inventory, manpower budget. So here you project how much units will be sold. So if you have to sell so many units, naturally you have to produce so many, that much. So how much should be your production? What will remain in stock? How much is your opening inventory? If you have to produce so many units, how many man hours are required to produce these many units? How much of power will be required? Do you have enough capacity to receive or generate that power? All these budgets look at physical terms. We are not looking at cost or the financial aspect here. In terms of physical units, these physical budgets are prepared. Next are cost budgets. The budget which provides cost information is called as a cost budget. So here you are manufacturing, selling, admin budgets which project manufacturing cost, selling cost, admin cost, R&D cost. Now the budgets which we were talking earlier, the physical budgets, they act as a base. Based on physical budgets, you look at the cost per unit and try to calculate cost budgets. So all the costs required for manufacturing, admin and various functions are properly summed up and you get various cost budget. The third type of budgets are profit budget. So from physical budgets you have developed cost budgets, from cost develop budgets you can develop profit budget. So they enable in the ascertainment of profit. So you can make your sale forecast in terms of rupees of sales and compare with your costs. So sales minus costs will give you profit. That is why sales budgets, P&L budgets are an example of profit budgets. So these are the three different types of budgets. In fact, four if you compare include master budgets. So you have started with master budget, then in individual functional budgets you have physical budgets, from physical budgets you get cost budgets, from cost budgets you get profit budget, and then of course with this input the master budget is again revised. So this process goes in cycle. After 2-3 cycles maybe you will be able to estimate your budgets, final budgets before the starting of the period. Now let us look at the types of budgets. Now budget can be categorized into different types. I have tried to enlist a few types. So one of the ways of classifying is fixed versus flexible. We have just now seen master versus functional, then you have long term versus short term and current. So these are various types of budgets. Of course, apart from this also there are more budgets like zero based budget, PPPS, but we will look at it later. So some of the important types of budgets I have tried to note. Now first is fixed budget. As the name suggests, it is fixed in nature. So it is not programmed or arranged in such a way that it can be changed with the level of activity. It is an estimate of certain level of activity and cost for that level of activity, or quantitative requirement for that level of activity. Such a budget is suitable for fixed expenses. It is also known as a static budget. Can you think of an example of any fixed expense for which you can make a fixed budget? Just think over, we have discussed about fixed and variable costs if you remember. So can you think of some fixed budget? Yes, I think most of you would be getting. Rent is a good example, depreciation can be an example. So for estimating such costs, you can make the fixed budget, because even if production changes, even if say your demand forecasts go wrong and you have to produce more or less, fixed budget is not going to change. So fixed or the static budget is usually preferred for fixed overheads or fixed expenses. Now this is not very suitable in a dynamic environment, and it also cannot be used for a very long period of time. So if your environment is changing dramatically, even your fixed expenses tend to change. Similarly, say the rent is fixed for next 3 years, but after 3 years it is bound to change. So for a longer period of time, you cannot use very rigid budgets. And anyway, for variable costs, you cannot apply fixed budgets. So costs like direct labor, direct material or power cost, the fixed budgets are not going to be of any use. Now let us look at flexible budgets. Now flexible budgets show the expected results of responsibility center for several activity levels. So what happens is, instead of fixing the budget, let us say for 1000 units, I am estimating 1000 units, so I have estimated a production cost of 1 lakh. But in flexible budget, instead of 1000, actually it may become 1200. Number of units may increase. So for 1200 units also I should know what will be the manufacturing cost. Similarly, there is a possibility that number of units may fall. Let us say units may fall down to 700. So what will be my estimated cost? So in flexible budget, a series of static budgets are made. So instead of just estimating at say 1000, you estimate for 500, 600, 700, 800, 900 units, and also if 1100, 1200, 1300, 1400, like that. So for range of different levels of activities, series of budgets are made, and that is a structure of flexible budget. So naturally, when the flexible budgets are set, all the costs should be properly categorized into fixed, variable and semi-variable. Because if costs are properly categorized, then that will form as a good base for flexible budgeting. Okay, so fixed costs may not change much, variable costs will change with level of activity, semi-variable costs will not change, they may change stepwise or they may partially change. All this variability will be very much useful for fixing of flexible budgets. Can you think of examples of each of these categories? Again, we have done it earlier. Can you name 2 fixed expenses? Just think over. Suppose you are operating a fleet of cars. You are into transport business. You own fleet of cars and give them on rent. Please tell me fixed expenses, variable expenses and semi-variable expenses. I hope most of you are getting. Fixed would be depreciation of the car. It could be insurance of the car, depreciation of the car. These are fixed. What are variable? Generally petrol will be variable. Any other? If you are incurring some costs as and when you travel, then that will be variable, say like driver allowances. What could be semi-variable? Mostly drivers' salaries will be semi-variable. They will have fixed component plus they may have some incentive. Maintenance will be semi-variable and so on. I think we have studied it earlier, but I am just repeating because that analysis or that categorization will be very much useful to set up a good flexible budget. In most cases, the level of activity varies either because the demand changes or because of seasonal nature or because of some circumstantial changes. In all such cases, flexible budget is very much suitable both for industries as well as in government organizations. Now let us look at other categorization which we have already discussed, that is master versus functional. Now functional budgets are those which relate individual functions or tasks and look at them in detail. So you have production budget, sales budget, you may have purchase budget, plant utilization budget, cash budget. All these are examples of functional budgets. They look in detail at a particular function. A consolidated summary of all these budgets is a master budget. It is based on the overall goal set for the organization. So based on the managerial policy, you have a master budget. It may be subdivided into functional budgets. Again, from the feedback of functional budgets, when all the functional budgets are coordinated, you come out with a consolidated summary. And usually the master budgets are in the form of budgeted P&L account or forecasted balance sheet. Budgets can also be categorized as long term and short term. So naturally, when the budget is prepared for more than 1 year, usually we call it a long term budget. It is very much useful for strategic planning. Examples of long term budget could be R&D budget, capital expenditure budget. So suppose we want to, let us say, acquire a new company in next 3 years. So we may have to start much in advance, look at the target companies, do the due diligence, start negotiations, then look at how the company can be acquired, how it can be assimilated with our existing operations and so on. So I just gave you one example of capital expenditure budget. It could also be starting up new plants, it could be constructing of new infrastructure and so on. Same way, R&D budget often has to be allocated for a longer period of time. So experimentation and R&D will have to be done for a pretty long time. Then you will be able to develop a new technology or get patent and so on. The next is short-term budgets. Now when the budgets are prepared for a relatively shorter period of time, could be for a month or a quarter, it's a short-term budget. Cash budget is a good example. So in cash budget, we have to estimate the availability of cash for every month or every 15 days, so that we know that for the expected expenditure we have enough money. If there is a shortage, we have to arrange for the money. If there is excess, we have to look at suitable investing. Now such budgets are very much useful for control purposes, because you want to develop a budget, compare with actuals and take proper corrective action at the earliest. Similar to short term budgets, you also have current budget. These are also for a use for short term, and they are only prepared considering the current scenario. There is one more interesting concept known as zero based budgeting. But before going to zero based budget, I think we will look at few cases on whatever we have discussed. Let us look at the cases to make the things more clear. Okay, look at the case now. So we have a single product company which has estimated the sales for next year quarter wise. I hope you can see the data from April to June, it is 40,000 units. July to September 30,000, then 60, 75. The opening stock is 15,000. So what you have got is a demand forecast in terms of sales. Now company wants to maintain 10,000 as a quarter ending inventory. So you have to calculate the production budget quarterly as well as yearly. So how will you do? A very simple budget, but just this will give you a clear understanding as to what a functional budget is. Think over how to solve it. So you know the sales, you know opening stock, you also know the closing stock. So you can easily calculate the production. I hope you know that sales is the quantity you must sell, plus you have to keep the closing stock minus the stock which you have in hand, opening stock, that gives you your requirement of production. Let us look at the production budget. So first it is prepared on yearly basis. I hope it's very clear to you, very simple. First we have calculated the total sales for all the 4 quarters, which comes to 2,05,000 units. Add the closing stock, because only 10,000 stock is enough, but the opening stock is 15,000. So it means that we have to make production of 2 lakh units during the year. But of course, this is a very overall picture. It's an annual picture. We would like to know what you have to produce every quarter. So this production budget, which is yearly, can be broken down into quarterly production budget. So how will you make it? Just think over. Okay, let us look at quarterly production budget. Now, instead of one column, we have made it column for each quarter, but otherwise the structure is same. The sales for each quarter are taken. So they were estimated to be 40, 30, 60 and 75. So that is your starting point. Sales. Add to this the closing stock. You know that at the end of the quarter 10,000 closing stock is enough. Less opening stock. At the beginning we have opening stock of 15,000 and in subsequent quarters now the opening stock will be only 10,000. So production is 35, 30, 60 and 75. Is it clear? Now this is an example of a functional budget. Now what type of budget it is? Is it quantitative budget, cost budget or profit budget? Which type it will fall in? I hope all of you are able to answer. This is an example of a quantitative budget. You can see we have not gone into cost aspect right now. We don't know how much cost is spent to make these units, or we don't know how much money needs to be allocated, how much profit is generated. But this is a starting point. Here we have just calculated what will be the requirement of units to be produced. Okay. Now let us go to the next case. Is it visible? So company produces 3 products. Now the requirement of skilled, unskilled is clearly given. So you have 3 products X, Y and Z. Every product requires certain number of labor hours. So skilled labor hours required are 6, 4 and 7 per unit of X, Y, Z, and semi-skilled is 4, 6 and 8. The wage rates are 170 and the production ratio is 9:5:6 with a total production of 50,000 for a particular period. You are required to make direct labor budget giving both the number of workers needed as well as the wage cost. So how will you go about? Can you think over? How will you able to know the wage cost? I think you are able to guess well. We will look at the total production first, which is 50,000. The ratio is given 9:5:6. So we can calculate the requirement of each product XYZ. Now based on that requirement, look at the number of workers as well as the cost which is required to be incurred for direct wages. So let us look at the solution now. We start with the production of 50,000 broken in the ratio of 9:5:6. So we get 22,500 of X, 12,500 of Y and 15,000 of Z. Now the skilled labor is first we are budgeting. So budget for skilled labor. Skilled labor hours per unit are 6, 4 and 7. So 22,500 into 6, we get to know the total skilled labor hours required, which is 1,35,000, 50,000 and 1,05,000. So if you sum it up, you get 2,90,000 of hours required. Now number of hours per worker per month you can calculate, because it is given that each worker works for 8 hours and for 25 working days in a month. So 25 into 8. So hours per worker per month come to 200. So if you divide 135 by 200, you will get the number of workers required, which is 675 for X, 250 for Y and 525 for Z. So total is 1450. In other words, we need 1450 workers for the coming month. The total wages, now the wage rate is given, which is 100 rupees for skilled labor. So number of hours, which is 1,35,000 into 100 gives total wage cost of 1,35 lakhs for product X, right? Same way for product Y, it is 50 lakhs, and for product Z, it is 1,05 lakhs. Now all these three are total, so you totally get 2,00,00 90 lakhs. Is it correct? Any doubt? Okay. So this was for skill labor requirement. Now on the same lines, we will estimate the requirement for unskilled labor, both in terms of number of workers as well as their cost. Now think over, can you make it yourself? Just as you have a budget now for skilled labor, try to make budget for unskilled labor. Try to use your calculators or computers. Calculate the figure and then we will compare. We are doing budgeting, so we should do something and then compare and see whether we are right or wrong. I hope you are able to proceed properly. So we will start with the unskilled labor hour requirement per unit, which is 4, 6 and 8. This was given to us earlier, 4, 6, 8. So based on 4, 6, 8, we calculate the total skilled labor hours, which are 90,000, 75,000 and 1,20,000 divided by 200. So you get 450, 375 and 600. So number of unskilled labor required is 1425, almost similar to the number of skilled labor required, that was 1450. Now we can look at the wage cost, which as you can see is 63 lakhs, 52 lakhs 50,000 and 84 lakhs. So totally it is 1 crore 99 lakhs 50,000. This is also called as unskilled labor wage budget. Okay. Now take the total for skilled plus unskilled. We have been asked to estimate the quantity as well as cost. So total labor hours required, number of workers required and wage cost are total. So the figures are respectively 5,75,000. You need workers, 2875 workers, and the total cost will be 4 crore 89 lakhs and 50,000. Have a look at budget once again. Okay. Now I hope you are able to fully see a direct labor budget or direct wage cost budget. Now what type of budget it is? Is it a physical budget, cost budget or a profit budget? As the name suggests, this can be categorized as a cost budget. You will see the starting point was a physical budget, that is this production budget which was known. From that physical budget we have multiplied by the number of hours required, wage cost and so on to get the total wages, that is the cost budget. Okay. Now let us go to one more case. Read it carefully. So here we have been asked to estimate the raw material consumption. So it is known as raw material consumption budget. Company manufactures two products, P and Q, use of two materials which is W and Z. Product P requires 15 units of W and 8 units of Z. Product Q requires 10 units of W and 3 units of Z. The sales manager has estimated sales of product A to be 6,000 and B to be 12,000. Now there are 24 6 days week in a budget. Opening stock is given as 400 and 1200. Now the targeted closing stock is 12 days of sales for both the products. So you have to prepare raw material consumption budget. So how will you go about? I think your guess is right. The starting point is we should know how much production is to be done. We are given sales. So from sales estimate the production. From production of P and Q try to look at the requirement of Y, W and Z, which is the raw materials, and then multiply by cost. So sales are 6,000 and 12,000 of P and Q. Then we have estimated the closing stock. Taking 12 days sales, the closing stock comes to 500 and 1000 units. Opening stock was given 400 and 1200. So production becomes 6100 and 11,800. Now look at the consumption, which is, we know that it requires 15 units of W to make 1 unit of P. You can just go up and check. Is it right? So now you have 6100 units of P. So for W, requirement of W, we have multiplied B27 into 15. So 19,100 units of W and 48,800 units of Z are required for P. In the same way, for Q, we have looked at the production of Q, which is 11,800, and multiplied it by 10 and 3 to get the requirement for Q. Now you can take the total requirement of W, which comes to 2,09,000 and 84,200. This is the total consumption of raw material. You can call it as a raw material consumption budget. Okay, I hope it's clear to you. Now this falls in which type? You are right, this is also a quantity budget. We have not gone into cost, we have just looked at how many kgs or how many units of raw material are required. Is it clear? Okay, so today what we have discussed? We have discussed what the budget is, then we have seen what is budgetary control, we have discussed the objectives of budgetary control, advantages. Very in nutshell we can say that this is a technique of cost control, but goes beyond the realm of cost. It is used as a planning tool. You plan well, channelize your energies properly and try to achieve the goals. That is the objective of the budgetary mechanism. It is used in government as well as industries. Now budgetary control improves our planning, directing and coordinating. We have also looked at some of the cases where we have calculated production budget, raw material consumption budget. In one of the case we have also calculated the direct wage cost budget. So in next session we will do 1 or 2 more cases and we will also look at some of the techniques like zero based budgeting. Thank you so much.